Amazing. Thank you so much for that introduction. Hello, everybody. Good afternoon. Hope you're all well. If there's any chance at all you can move a bit forward, that would be amazing. Otherwise, just please welcome again, once again. So my name is Yemi Oluseun. I'm a growth consultant at the Change Hive, and I'm delighted to be hosting this fireside chat with Ivan Luthra. I'll just introduce Ivan so you know who Ivan is. So Ivan Luthra is a highly accomplished entrepreneur known for turning original ideas into innovative and profitable businesses. I'm sorry, I can hear an echo. He started his journey as a serial entrepreneur at a young age and has achieved significant success in the technology and startup world. Ivan's expertise includes mobile apps, blockchain, angel investing. He has founded and invested in numerous companies across various industries, disrupting existing markets and technology. He is a sought-after speaker and has given TEDx talks, spoken at universities, and appeared at conferences worldwide. Ivan's impact extends to the NFT space, where he holds a substantial portfolio. He's dedicated to innovation, and his courage to transform ideas into reality has earned him recognition from leading media outlets and a solid following on social media. Ivan is a two-time Forbes 30 Under 30 winner, US Today blockchain expert, and Business Insider NFT guru. His motto is, "The best way to predict the future is to build it." Ladies and gentlemen, let's give a warm round of applause to our guest, Ivan.
Thank you.
Thank you. Ivan, welcome. Before I start the session, I just wanted to set the context. We have about 30 minutes together, and our aim is to give you practical, actionable insights into the VC landscape, especially as it relates to fintech, but we're going to be focused on the crypto technologies and Web3. Can I just get show of hands? Is anybody in the room currently raising or looking to raise soon? Thank you. Okay, cool. So we're in the right room then. Okay, so I'm going to leave about 5 minutes at the end for Q&A, so please start thinking of your questions because I'm going to hopefully get one or two questions from the audience. Okay, let's kick off. So Ivan, once again, welcome. Can I just ask you to share with us your investment thesis? We know you're an angel investor. Do you have a specific thesis that you're looking to invest in?
I like to invest across the board. Most of the time, I like to invest in technology and industries where technology is being used to disrupt the current way they operate. I like to invest in technology because technology is generally the fastest growing industry out there. Most industries grow 20 to 30% linearly over the years, but technology, you've seen exponential growth. It's called reaching a J curve. When a company starts growing, it starts building, and when it finds a product market fit, it can skyrocket. Very simple layman terms, if you are in the fashion industry or in the hospitality industry, you have to make each item of clothing or each food snack every time you want to make profit. In technology, if you make an app once or you make a product once, 8 billion people who have access to the internet or to the software devices can start using it. So I like to go for the exponential growth. I'm not really looking for all my investments to work out well. I'm looking for those outliers which go over 100x, 500x, sometimes even 1,000x returns that pay for all the other losses. So that's my investment thesis, very broad in the technology space, many different industries. I've been fortunate because I've been early in many different sectors inside the technology space already. I was one of the first few hundred people to build apps for the iPhone. I was very early in the VR and AR space. I was the first 10 people in the world to actually have access to Google Glass. This was too early for its time, but we see now VR and AR taking a big position in the market. And also in the crypto space, I've been early in Web3 since 2014 when I bought my first Bitcoin, to 2016 to 2018, investing early in equity of companies like Hedera, Hashgraph, XRP, Ripple, and then many more.
That's amazing. Thank you for sharing that. I like that you're focused on scalability. But in terms of company stage, is there a specific stage that you invest in? Are you investing in seed or?
I like to go for the early stages and earliest rounds because they have the highest potential and the highest growth. And I am willing to take high risks. So that is okay. That fits my thesis. Most of the time, it's like trying to invest in companies which are very early and they're still finding that product market fit. So that would be more preferred by me. But I'm also not against investing in late stage companies. I have done a few late stage investments simply because I wanted to be interested in that space. For example, SpaceX was a pretty late stage investment for me. It was already a multi-billion dollar market cap. So, but most of the times I'm investing very early when the companies are between 2 to 10 million market cap and they're getting started. Sometimes a little bit more, but mostly seed rounds.
Okay, so 2 to 10 million market cap, Sid round. Is there any other criteria? And
I mean,
scalable?
it's pretty vast, right? There's a lot of different things I look at. It doesn't have to fit one box. Like I'm always happy to look at all kind of opportunities that come my way. Even outside of technology, I've done various investments. I have a hotel project. I've done real estate. I've done over a dozen coffee shops. I have
Interesting.
a fashion company. I have a modeling agency I've invested in. So anything that interests me, I'm also open to those things. But there is no one fit box or criteria that I look for.
Are there any specific challenges or opportunities you're seeing in the marketplace right now, especially for in the fintech space specifically?
There are definitely challenges when it comes to the Web3 and fintech space. It comes to challenge from what respect though? Like,
Opportunities are opening up. Are you seeing like any trends
I
or
mean, this whole space is a growing space, right? So there's the challenge is getting more adoption and getting people making the user experience more smoother. But this is still a very, very early stage process. There's less than 10% of the world that's actually using Bitcoin to any extent. Fintech generally, yes, we have already seen massive disruption. Places like Africa, where people have directly moved to mobile banking, right? They skipped the whole banking as we know it right now with all these debit cards and checking accounts, and they skip directly using their mobile phone numbers as their bank accounts, and that's happened at massive scale. But in Web3 space, there's less than 10% of the world that actually holds Bitcoin, and anybody who's getting involved right now is still very, very early. The opportunity to invest in Web3 is insane. Like there's every industry that we know it is getting disrupted by becoming more transparent, more decentralized, and more distributed, and that's what we are seeing with the Web3. So you can get involved in many different ways, and there's opportunity everywhere you look.
but when it comes to doing your due diligence, is there something specifically you look out for when you look at a Web3 company versus a Web2 company? How does the due diligence change, or is it the same across the board?
I mean, for me, there's not really a difference, and there's a lot of times you're looking at companies which are basically Web2 companies, but they're implementing a token. So does that make them Web3? Yes, but their business model is pretty much Web2. So it's not like a differentiator in at least I look at these deals. I look at them all the same, and I look at them with a similar opportunity. The only difference that is there, at least in the decision-making process, is I've done over 100 plus Web2 investments before I did my first Web3 investment. And that equity, even though it's grown in value and over 100x sometimes, it is still locked up. It's not liquid. Versus investing in Web3, you can invest in a token and the token gets listed in 3 to 6 months and you realize your returns really, really fast. You get your liquidity back that allows you to cycle and make better use of your money. So that's why I'm more bullish on Web3 generally. It's a lot more liquid, a lot quicker. But when it comes to due diligence, I'm looking at all the companies the same way. It's just in the decision-making process, having quicker liquidity is definitely a big plus for me.
Have you got any specific case studies, ideally something regional that you've invested in recently?
I mean, I'm very active. I've done over 60 investments just in 2023, and I will probably end the year with over 100, 150 investments. So there's a lot of case studies. It depends what kind of case study you're looking for. Like I said, I'm very investing.
Specific one that stands out as essentially
The best
point, yeah.
example I would say is ChangeGPT. I invested around 4 months ago. It already listed. It went over 50x. So I have made a huge return on that investment. That paid for all the other investments this year. I've already sold around, I think, 30% of my tokens and realized 20x or so from these investments already.
So from a founder's perspective, thinking about I want to raise for my startup, I'm talking to you as an investor. Using those case studies that were successful, what made them attractive to you as an investor, and how can I
mean, with ChangeGPT
myself?
specifically, it's more of an outlier where they were able to deliver from just a VC investment perspective. They were able to deliver good returns because they were an AI project building an AI solution, and AI was the trend and the thing being talked about the most in the last few weeks, in the last few months. So, I mean, I like to say when it comes to investing, trend is your best friend, right? So if you follow trend-based investing, you would generally make good returns. And that's what we've seen. When layer 2 was a trend, we had all these airdrops coming from Arbitrum and all these new layer 2s, they all just blew up. And then right now, I think the next coming market, I actually talked about why the last bull market, I made most of my money by investing in play-to-earn games, because play-to-earn and metaverse was the trends. The best performing investments in the last bull market was all like CryoWar, Nakamoto Games, and a few other projects, which were all like play-to-earn and metaverse. And I think the next bull market, the trend would be real-world assets and gambling. I think gamble finance, where is going to be a big liquidity bringer. It's going to bring a lot of liquidity to the market. And then also, I think real-world asset tokenization is also going to bring a lot of value on chain, where we are already seeing a lot of real estate, a lot of hard real-world assets being tokenized, and that value is being transferred on chain.
Interesting. So I suppose, given that, is the advice really to follow trends and see what the trends is and jump on the next trend? Is that the...
You asked me one case study, and I gave you what you can learn from that case study, right? And there's different things you can learn from each different project, and why did they well. So for the advice is, yes, following the trend definitely makes you happy, but more than anything else, you need to find to make a business sustainable long term, you need to provide value, and where you bring that value. Success is a byproduct of creating value for others. The more value you can create for somebody else, the more value you can get for yourself. So that should always be the first focus, is what is the problem you're solving, how big is the market size, and how efficiently you can solve the problem. I think that's what you should really look at. And you can use Web3 to bring in tokenization into your business model, and then that could make it a sharing economy base, and that's always better. I mean, right now, most businesses they normally have three stakeholders involved. Is a user of the business, the manager of the business, and the owner of the business. All the three stakeholders, they want different things. The user wants the best product for the cheapest price, the owner wants to make the most money, and the manager wants to keep the user and the owner happy. But the incentives don't align. With Web3, you can bring in a token, and you can align the incentives between the user, making the user a part owner and a part manager, and that's how you really win, because then you have exponential growth. They all want the same thing. You're aligning the incentives. A simple way to, in layman terms, would be like, right now, if I ask you what's the best car to buy, what would you say is the best car to buy?
Depends on your preference. Mercedes.
Okay, so if you would say Mercedes, somebody else would say Ferrari, somebody else would say Rolls-Royce. But let's say tomorrow Toyota and Hyundai come out with their tokens, and you get some Toyota tokens, I get some Hyundai tokens. And every time a Toyota or a Hyundai is sold, we get a claim of that sale. So next time somebody asks you what's the best car to buy, you will probably say a Toyota, because if you make a sale happen, you earn a cut of that. So you are suddenly a part owner in the business, and that's already using massive growth. You're aligning incentive between the user and the company. And then in another level, let's say, I don't know, like Mercedes makes $10 billion a year, and they decide to, the small boardroom that manages the budget gets to decide where all that money is going. But if tomorrow Toyota launches a token and you hold tokens and you can vote, should they invest in a new bicycle, or should they invest in a new plane, or should they invest in a new yacht? I would say invest in a yacht, because I like to be on the water. Maybe you would say, I don't know, plane or bicycle or something else. So the user also has a say in how the company is governed. So I think that's the benefit of Web3. And if you first you have to solve a problem. If you're solving a problem well, and you can bring Web3 into it, you can have massive exponential growth.
Yeah, I see what you mean, and it makes a lot of sense as well. Just so you know, ladies and gentlemen, I've got one more question, and I'm going to open up the floor to questions. In terms of the regulatory landscape, are you seeing any challenges as an investor?
In the Web3 space, especially, because regulatory is always a little bit of it's always an issue, right? I mean, because the space is growing so fast, and the regulators are not educated enough to make the decisions that fast. Even somebody like me, who's deeply involved in 500 investments in different companies, I'm in hundreds of different groups, and I'm getting information sent to me daily as it is happening, and as this as this news is developing. Even me, it's hard to stay updated, because there's so much going on, and the smartest people in the world are working in the Web3 and blockchain space. So when you see that, it's almost like very hard to stay updated. So there's a reason why these regulators are not able to make these decisions fast enough. What I recommend the companies, my advice to the companies will always be transparent and ethical. Be as transparent as ethical you can be, because blockchain is about bringing transparency, right? That's the best thing about it. It brings transparency and auditability that did not exist before. So be as transparent as you can, and then also always share, always be ethical in what you do. And for the governments, my advice is, you gotta take your game up by a notch, and you can start bringing in regulations that are beneficial to the companies and the entrepreneurs building in the space, and also the users of the space, because otherwise you would lose the users. I mean, software is not really based out of anywhere, right? Because it's built remotely. You can build software on the beach. So it's like the companies can be housed out of any other jurisdiction, and that's what most Web3 companies are doing. They're going to jurisdictions which are treating them best. And in this case today, when access to information is available so easily, people know that they have options. They will go where they're treated best. They will go to the jurisdiction that gives them the best benefits. And the countries which are slow in bringing regulations or bringing unfavorable regulations will lose this brain talent, and will have a brain drain where they lose all the top entrepreneurs who go and incorporate out of other jurisdictions. So that's what I would say. I mean, today we are in an era where, like, somebody like me, born in India, I can get a passport from St. Kitts and travel to a different country without having any regulatory hurdles. I can have a company in St. Kitts that pays 0% tax, while I can build a company while I travel all over the world, and the staff is based in 20 different countries.
So in your experience, which country is currently one of the best places to set up a Web3? Which country has
It's hard. I don't want to give advice which gets me in the wrong direction, because it depends entirely on you. It depends where you are from. It depends where you're based, where your passport is from. What is the company doing? Is it tokenizing real world assets, or is it launching a gaming token? It's different terms for utility tokens, different. And do you need a fiat off-ramp and on-ramp? Best case scenario, you don't need to off-ramp. You keep all your value in the Web3 ecosystem. But if you need to pay suppliers, you need to off-ramp, do you need bank accounts? All these things change. Where is the best option? The best thing is to go educate yourself. Instead of letting other people tell you what to do, in crypto, you should always do your own research. You should always find out. And it also is changing very, very frequently. The companies, a jurisdiction which may be beneficial right now may not be beneficial next week. Because the laws are being changed as we speak. And the laws are being developed as we speak.
Absolutely.
So you should always find what the latest information is and go there.
Are there any resources you recommend, finally?
You can follow a lot of different online platforms. I mean, there's two here in the audience, Zillionaire and Cryptopolitan. You can go follow them. But there's a lot of online different platforms. The best is go online and do your own research and find what kind of content reaches out to you.
Amazing. Thank you, Ivan. Do we have any question from the audience, please? No such thing as a stupid question. One? Yay, thank you. Can we please send a mic? Thank you.
Thank you. I've been here for 2 days, and I think, it would be nice to ask a question. Hi, my name is Nana Suanavong. I also started my journey as a baby angel investor in a small country called Laos. So with a population of 7 million people there, I invest in about 13 companies, but mostly in tech startups and also in social enterprises. So I would like to learn from you, how do you overcome the challenges to consider investing in a small market? Because every time when I ask other friends, other investors friends, hey, come by, invest in Laos, and they would be like, oh, it's a small market. Talk to me again when you have the market size of 100 million people. So I would like to learn from you on the challenge on the market size. Thanks.
Great question. Thank you. Can I just take your name again one more before, Ivan? What was your name, please?
Nana.
Nadia. Thank you, Nadia.
Yeah, so that's a good question, Naya. But like the market size is always very important when you invest in something, because you want to know that there is a high upside, that the company doesn't have limits to what they can cross. But when you're investing in technology, normally the market is your whole world, right? If you can prove something that works locally in one region, it will get copied really fast by other entrepreneurs around the world. Also, I've seen that happen in an exponential scale around the world. Like Uber started in the US, and now pretty much every country you go to either has Uber or a copy of Uber being used, right? And there's actually whole multi-billion-dollar entities and organizations that have been built by copying other successful tech startups. It's called Rocket Internet. You can look it up, their history in Germany. They basically copied all the biggest business models that worked, tech startups that worked in some other part of the world, and they brought it to another different part of the world. And they never really came up with anything new, just copied other tech solutions and tech startups. So there's always opportunity where you can prove something that works. I'm not really concerned about market size or market first first market that a product is going to, as far as something that will apply globally. If it is something that will only serve that market, then I wouldn't really call it a tech startup, because something to qualify as a fast-growing technology startup has to be something that has a massive scale. Otherwise, it's not really investing in technology per se, where you're not really getting that massive scale. But most of the time, any solution or any tech product that you're building, if it's working for one market, with a little bit of tweaks, it will work also for another market. So that shouldn't really be a struggle. And yeah, I mean, I am open to this Laos market also. So if you want to send any ideas my way, please DM me on Twitter or Instagram, or my email, evan@evanluthra.com, and happy to have a look. So yeah, thank you.
Thank you. Great question. Any other questions? Thank you. You opened up the floodgate now. Yeah, thank you.
Hi, Yuan. I've seen you actively talking about this project called Cylinear. So I'm interested in knowing what exactly that term is. And
Please hold the mic to your so that we can hear you clearly.
I've seen you actively talking about this project called Cylinear. So I'm interested in knowing what that term is. Are you an investor in that project? And
So Cylinear is basically, this term was coined by CZ from Binance. And basically Cylinear means crypto millionaire. So people ask, how did you make your money? And for most people, I already had certain success before crypto, but for most people, at least in this room and many other places that I go to, they made their first million from crypto. So instead of calling themselves a millionaire, they should refer themselves as Cylinears. And that's what Cylinear is. It's mostly a media platform that shares interviews with other fellow Cylinears and also CEOs, and shares experiences from people being in this crypto journey and what they're doing, and they also share regular updates. So yeah, feel free to follow Cylinear if you want to know more about crypto and stay updated. I'm an investor in Cylinear and also some other media companies along the way. My dog also is actually, he posts every day about crypto information. His Instagram is Crypto for Crypto, and he's actively sharing information about what's happening in crypto every day.
There you go, guys. Follow him.
Follow my dog. It's more educative, yeah.
Any more questions? Sir, please. Oh, we got one behind, and then we'll come to you. Thank you, sir. I think we're good for
Roberto
time.
Kaufmann. Thank you very much for the interesting discussion. From your viewpoint, what will be the main trigger to make Web3 mainstream?
Web3 more what?
Make it mainstream.
It's already happening, right? I have been to countries like El Salvador, where I landed at the airport. I paid my visa fee with Bitcoin. I went to the Pizza Hut. I paid pizza with Bitcoin. I went to the hotel, paid my hotel with Bitcoin. So it's already happening. It's just a question of, when you're talking global domination, it takes time, right? You're not going to go from a completely standardized world to decentralized overnight. It's a gradual process that's been happening for a long time. You go from a standardized world to semi-standardized. Eventually you decentralize. And we're seeing this happen at a very massive scale. You go to St. Kitts, and I was just with the founder of Bitcoin Cash, Roger Ware, one of the earliest guys in Bitcoin. And everywhere in St. Kitts, pretty much Bitcoin Cash is accepted. So we're seeing adoption happen. We're seeing disruption happen. What people fail to realize, like I also already mentioned, was technology grows exponentially. Whereas you may underestimate what's going to happen in 10 years, but you overestimate what happens in 2 years. So right now, we're already seeing mass adoption of AI. In the next 5 years, there's going to be crazy amount of jobs being replaced by AI. And it's outside of Web3 and Bitcoin, I think it's the most disruptive technology that I've seen is AI in recent times. So mainstream adoption is coming, and as AI becomes more prevalent, more things will go on chain, more assets will be digitized. Like I already mentioned in my panel of chat, I think the next big adoption will come from tokenization of real world assets. That's going to bring a lot of value on chain. Whatever you do right now, from your land records to your driving licenses, all of these will be digitized. Your driving license, your passport will be an NFT. Your land record, your ownership document, your car, you own a car, everything will become tokenized on chain, and then all these transfers will also happen on chain. So I would say give it another 5-10 years, and you're going to be like, there's more Web3 than there's not Web3.
So now is a good time to get in.
Thanks.
Yeah, now is the time to get in. As an investor, you make your money when you're early to the game, not when it's already mainstream.
Thank you. And we had one more question in the front as well, please. So just get the mic to you, just in the front. You're very popular.
Yeah, you kind of touched on my question already with your last answer, but my question was going to be, I've seen a lot of news articles saying that the tokenization of assets market will be $3 trillion a year in new assets by 2027, and with, by 2029, a total of 16 trillion. Do you believe those numbers?
So I don't like to predict the future. I like to say the best way to predict the future is to go build it. And at the rate of companies in the Web3 space building around the real-world asset tokenization is growing very, very fast. So I think trillions of dollars in the next year is very much possible. I think definitely there's going to be trillions of dollars of value being bought on chain through tokenization of real-world assets, for sure. I'm very, very bullish on that. There are companies that I advise that do the same thing that already itself have tokenized multi-billion-dollar worth of assets. I'm building a resort in Zanzibar under the name of Casa NFT, where I bought 80,000 square meters, and we have over 100 villas, hotels, the wellness center, technology center, shopping mall, commercial center, restaurants, and most of that is tokenized already, right? So that whole hotel project, I'm tokenizing it on chain, where there's two benefits to this. Mostly, as far as, especially in the real estate space, which is multi-trillion-dollar, I think one of the largest, if not the largest asset class in the world. And if a small part of it comes on chain, that's a huge growth. And the benefit of being on chain is, I think, a much more increase in prices. For example, with Casa NFT, the idea behind the Zanzibar project is that we have the downside of real estate. We have the safety of investing in real estate, which generally does not go down over long term. But you have the upside of actually holding an NFT. So if the photo of a monkey or these punks that I'm wearing can go to hundreds of thousands of dollars and millions of dollars, what's stopping asset-backed NFT like actually a villa from also reaching the same exponential growth? But with this, there is no backing to them except the photo itself. With that, you have it's backed by that actual real estate. So I think that's going to be really exciting how we see the market develop. Because we're in a bear market and there's not much liquidity going around, we're not seeing those massive returns right now. But I think we are ready for it. The next Bitcoin halving is around the corner. And as soon as that comes, we're going to see massive liquidity come in. And we're going to see a bull market come in. And I think real-world asset tokenization is going to bring in that liquidity.
Thank you. Any more questions? We have time for one more. Then we can wrap it up. There you go. Last one question. Thank you. Got a question at the very end. The gentleman in the white shirt at the end. Okay, thank you.
Hello, my name is Quinn. Thank you for your talk. It's been great so far. And I wanted to ask, you spoke a lot about real-world tokenization of real-world assets. And how do you envision the bridge between verifying a real-world asset and the decentralized world? And do you have any thoughts on that?
Can you say the last part again?
Yeah.
Bridging the gap between real-world assets and what? Decentralizing?
And
Can you
yes.
please hold the mic up, please?
Yes. So how would we verify a real-world asset, or would there be a centralized entity that does that? This is a challenge to the whole space, and I was wondering if you had any opinions or thoughts on that.
I mean, yeah, that's definitely right there, right? So I think there's not going to be one centralized entity. I think there's going to be a bunch of different on-chain organizations that will be verifying different assets that they have tokenized, right? So different products or different solutions are going to tokenize different types of real-world assets, and you have to have faith in that program, and then you can read: is that a DAO? Is that getting data from different stakeholders and different wallets, or is that data coming from a single centralized institution that's doing it? One of the projects I advise is called ArtFi. They are tokenizing real-world art, but they actually hold that art in their possession, and they allow you to, for example, Picasso or Michelangelo, as a normal individual, maybe you appreciate that artist, but you can't really collect them unless you spend tens of millions of dollars. What ArtFi does is they pick up that $10 million painting, break it up into 1,000 pieces, and let people invest in chunks. So you could buy a chunk of that, but the painting is always in the possession of that entity. So as Picasso becomes more famous over the next many decades or centuries, his value goes up, you can sell your piece. So they create this market. So nobody actually ever possessed that art. That piece was always in ArtFi's possession. People are able to lay a claim into the growth of that asset. That's just one example. But there are different entities out there that also let you buy different types of real-world assets. I think brands like already existing major brands like Louis Vuitton, Dolce & Gabbana, these brands are already using NFTs to, they already have NFT activations out there, but they can do it at a much bigger scale where when you buy a product, you know you're buying an authentic product because it comes with an NFT that you can verify on chain. It's very easy to verify. So it depends who's issuing that token for that real world asset. Who's the issuer? You can always check the issuer on chain. Nobody can fake that issuer. So that's the main value of having on-chain and bringing real-world assets on-chain. But yes, the real-world asset itself, if somebody sells you a real NFT with a fake product, you can't really do much about that.
So if you think about, just to see if I can add a bit more color to that. So if you think about the project you're working on, the Casa NFT project you're working on, are you also considering third-party verification of your actual assets in Zanzibar?
So no, so in our case, the ownership of the villa that the individual or the organization buys is an NFT. So obviously the villa, if you own the NFT, you can use the villa. And if you sell that NFT, you lose the ownership of that villa. Let's say you decide to rent out the villa, you're not using it, then that rental income is paid to the wallet that holds the NFT. So everything is happening on chain, and the NFT owner is the owner of the villa, and he can walk in any time and lay a claim on that villa. And obviously, if it's rented out, the rental yields are also paid to that NFT holder. It does not go to a third-party wallet.
So there's no need for a third-party company to make sure the villa actually exists. Because if I buy the NFT, how do I know that the villa is?
Well, you can go there and you can go chill on that villa. So it's yours.
Sounds good. So thank you so much. I think with that, we come to the end of this session. Just to wrap up, can I just ask you to share with us what the best way is to reach out to you and to follow your work?
Yeah, I'm very accessible on Telegram, Twitter or Instagram, or you can also reach out to me at evan@evanluthra.com. My Twitter and my Instagram is also at evanluthra. I'm always approachable, happy to help out any companies or anybody looking for funding or has ideas. Please feel free to reach out. If you want to stay updated about the crypto markets, you can follow platforms like Zillionaire. You can follow my dog, Crypto for Crypto, and any other platforms out there. Thank you, guys.
You're welcome. Thank you so much, Ivan, for sharing your insights. And ladies and gentlemen, thank you so much for being a brilliant audience and participating. Thank you. This was a pleasure. Thank you.
Thank you. Thank you very much, Luthra and Ulushong. Thank you very much for